It is universally accepted that the young people are idealistic. They care about other people. They care about not only their own future, but the future of their society as well. You can look at this everywhere, in every country, including Malaysia. Young people are basically looking for things that actually makes them emotionally and psychologically and mentally prepared to enter into fields that are helpful to the society as a whole. You say, what's the difference between me as an old man and some young person? Is that young person has the life in front of them, and they want to see that the rest of the society they live in prosper and grow. And you see most of the people now that are in movements against inequality, against poverty, against huge amassed fortunes of very few people in the society and enormous poverty, they all are concerned about these things. So the way to recruit young people into Islamic finance isn't to say, you come here and I'll give you you'll end up with a job that pays you $10,000 to $20,000 more, but say, if you really care for the society, if you care for the future, if you care for the future of humanity, if you care about poverty, about the deterioration of environment, about the way people are now, basically old people are being forced to live on meager income because they are not getting any returns on their pensions. If you care about these things, then you need to go in a field that says the society's risks have to be shared. They cannot be just simply passed on by a few people to a whole large number of the population. And so you end up with a whole bunch of people who are paupers, and then you have a number of few people who are very rich. And the present conventional finance does not have an answer. Look what is happening now. You have in the world, you have a situation where banks are offering, look at the Central Bank of Japan, for example, has a negative interest of 1.4. Negative interest of 1.4. So basically, this interest rate, which is usually a major cost of production for firms, is now not only not positive, it's negative. In other words, if the banks go borrow money from the central bank, say $100 now, at the end of the year, they have to pay $98.6 back. In other words, the central bank pays them to come and borrow money from them. Now, in other words, this is a situation where the cost of production would go down because of the, on the other hand, oil prices, which are also a part of the huge energy cost of firms, that is also going down to $30 or $27, which is equivalent to the price of 1950s. So the price has dropped from $140 down to $27, but yet the unemployment is growing. Firms are going out of business, they're going bankrupt. That's an anomaly. That the only reason that it is happening is because the system is now piled up huge amount of debt everywhere. The debt now, in the global debt, is now $60 trillion more than it was at the time of 2007-2008 crisis. And all the crises that we have known, whether it's, for example, the 1997-98 crisis in this area, or the crisis of 2007-2008, all of them, whether you call it banking crisis or exchange rate crisis or capital account crisis, all of them have now been found to have been debt crisis at the bottom. So debt, interest rate debt is a plague on the financial system. And having a negative interest rate is not going to help, because what's happening is that central banks are offering the banks to come and borrow money from it at a negative rate. For instance, in Japan or in the US, it's very close to zero. But then again, they want them to take this money and loan it out to consumers so they can borrow more, or they can buy more, or investors so that they can invest. But the banking system isn't doing that, because their objective is the bottom line. The objective of the central bank is to help the employment to grow and incomes to grow, poverty to decline. But the banking system looks around and says, well, here I have a government that's borrowing at, let's say, 3-4%. So you go and buy bonds, rather than loaning the money, government bonds. So you loan money to the government, you borrow from central bank, loan it to the government. So this is becoming a very absurd system, and there is a huge amount of uncertainty about this regime of financing. So sooner or later, it has to come to this, that creation of debt comes from this transfer of risk mechanism. So it has to come down to risk sharing. So if you tell a person, all of these problems that you see at the bottom is a question of creation of debt and passing risk from one rich individual to poor individual, or the taxpayers, the best thing to do is to share the risk, have everybody have skin in the game. Therefore, they will be reluctant to engage in processes, engage into businesses, engage into things that actually makes them lose money rather than earn money. When you don't have to worry about who is bearing the risk, when you can pass on all of the risk of your own operation to somebody else, you don't care, you don't have a skin in the game. You end up actually, this is a very famous statement that in the US, that basically, if you steal a loaf of bread, you end up in jail for a number of years, but you can steal billions of dollars in the financial system and you don't see one day of jail. So basically because you're rich enough to basically pass on the risk of your operations to the taxpayer.